Okay, great. Good morning. Welcome to the webinar on the 220 EMA Upside Breakout trading system. Thanks all for joining. Let's jump right into what I have here. So what we're going to do today is, well, first of all, obviously, disclaimer as always, but we're going to look at this trading system, which has also been implemented as a template in EdgeRater, and it's been in the program for just over a year now. It's one of my favorite templates because the system rules are very simple. And if you look at the output of this template, every evening, you will find things that are moving. It's actually almost impossible for a stock to make a 10% or 20% move without it appearing in the list. So it's something that I would recommend checking on every day, or at least every weekend. So it's a trend trading system, and trend trading systems have certain characteristics. Because you're trying to catch a long trend, you generally don't have a high percentage of winning trades, but the winning trades more than make up for the trades that are losing trades. So here's an example. Now, these admittedly have been cherry-picked from data going back over periods of time, but it does give you an example of the kinds of moves that you're looking to capture. This was a pretty good one with Weight Watchers with a 120% gain. And it didn't actually hit the entry until over here. We're going to get into the rules, what makes an entry, what makes an exit in a second. Is a very good one. Obviously highly volatile here, but the entry was actually fired down over here. And then there was a 780% gain in Jazz Pharmaceuticals. So with large gains like this, you can actually afford to take some small losses. It's going to, we'll get into the loss side of it in a second too, and find out what the typical losses are. Here's another good one. Alexion, 390% gain. Rice Energy, 94% gain. And you could go on with these. These occur and appear in the list all the time. Let's get right into the program. Now, before we get started on that, I just want to do a quick review of the week using some of the tools that are available in EdgeRater, just to give us a sense of where we are today. And one of the things I like to look at daily is the bucket migration report, the percent B buckets. And so to give a clue as to where the stocks within the S&P 1500 are trading in with respect to their Bollinger Bands, and where we are now and where we've come from. So let's take a look at a chart so we can kind of see the actual, oh, it came up on this screen over here, which is actually covered by all of the webinar stuff. Hang on one second. Great. All right, now to look at this, I would like to just put SPY on the chart. And let's pop these things side to side. And then let's just click over here to the very last bar, Friday. That was not quite hitting it right here. Okay, so this is the state of play with the buckets today. And you can see that this week has been quite an incredible week. There's something like a 5% move in the SPY. And last weekend, we were talking, it was this bar here, and the bucket situation, and I talked about this last weekend, looked like this, with somewhat extreme buckets, 85% and 15%. But I did point out also that this is somewhat extreme, but it's not as extreme as it was on December 24th, when we had 99% of stocks below the mid band and most of the stocks below their lower Bollinger Band. Super extreme there. But we're on a fairly extreme level at 85% and 15%, with most of the stocks below the mid band, and the profile of stocks looks like this in this chart over here. So let's just roll forward the week and see how the buckets shifted. So we can do that just by going day to day. So this would have been 6-3, which I believe was the Monday. Yeah, so this is Monday. So things changed from the Friday here to Monday. You can see there's the move of stocks moving through their Bollinger Bands. To Tuesday, quite a significant move. To 6.5, which was Wednesday. 6.5, you started to get quite a few stocks appearing above their upper Bollinger Band. 6.6, a continuation of that. And then 6.7, which is Friday. So we now have quite a lot of stocks above their upper Bollinger Band. So that's a very significant move. Just maybe 2 or 3% away from the all-time highs in the S&P. And obviously this is kind of critical level. So we need to find out whether this is going to be a move to all-time highs. And I think I said last weekend that I believed that we were one tweet away from the market reaching all-time highs and one tweet from it going much lower. So, it's hard to trade this market with the Twitter sphere going on. But anyway, here we are. That is the context. Now, let's take a look. This is another report that you can produce. And there was a significant change in the coloring of this report. We've been in a sea of red for a while, and these are general indexes, major market indexes. And if they're red, then they're essentially below their in the lower part of the Bollinger Bands. And if they're yellow, they're still in the lower part, but they're not as bad as red. But then we had this big straight blue line across all of the markets, which is your kahuna signal, which is a 3-bucket move, or 1 day change of percent B going above 0.3. So 3-bucket move in 1 day. And as Ian said, this is the point where you really need to sit up and pay attention, because now what you're getting is this red area over here turning to yellow, and we're now starting to see green come in here. Not all of the markets are green. Some are still yellow, so still warning. But what you're hoping for is if you're going to be trading on the long side, or if you have market long ETFs, then you're hoping to get into a nice green situation like this, kind of the all clear to go ahead and trade on the long side. But still a few yellows here, so still warning signs. However, the market has moved a heck of a lot, and I wouldn't be surprised if there's some retracement from here a little bit. Okay, so let's take these two away. And the other thing I just want to quickly look at is individual stocks, good, bad, ugly. I like to look at the good, bad, ugly report every weekend and just see what has been moving. I like to always run this on the CBOE weeklies list. Stocks that, so these are large volume stocks. They have weekly options. You could run this on the all securities list or the all USA list of 7,000 stocks, but you get some extreme moves in there because you've got penny stocks in there that can have some significant moves. And even though it's interesting to look at, I think this gives a more of a sense, a general sense of what's going on in the market. So week to date, this is last week, the biggest stock move in this list was Sienna. We see there's a big gap there in Sienna. The theme of the week, I think, or the big news of the week that if you're looking at one group of stocks was actually, and it's indicated down here, it's actually gold. I also mentioned that last weekend because that had started to move. So we talked about that. And then it's had quite a significant gold GLD. If we just was to put GLD on the chart, that had a very significant move for the week. But the problem with gold, of course, is that we are now approaching all of this overhead resistance. So that's quite a significant 2 weeks in gold. It's broken above this downtrending line over here, but there's a lot of resistance to get through here. But, you know, it could get through there for sure. And you could be in a big gold bull market, but a little worrying to put new long trades on, I think, in gold. Okay, so this is the state of play. Just a quick review. I'll just scroll down through a couple of these just to see if there's names that you're familiar with that you would like to see. So I'm just going to come down through here. And this is something I do quite regularly, is just flick through charts, see what moved during the week, see if there's any levels that might be interesting to trade. And also by doing this, you get a general sense by looking at the names of the stocks. You can see if there's like themes or groups that are appearing. Oh, right. Yes, Charles. Yeah, Trump's late night tweet that was yesterday about the Mexico tariff situation, and he's saved the day, and Mexico is going to do all they can to stop immigration so we don't have to do so much. And now tariffs are off the table. There's no tariffs coming in, 5% tariffs on Mexico on Monday. So, and that was news came out late last night. So is that a gap up situation? Possibly. There's still plenty of time in the weekend for more tweets to come out. Okay, let's move on to this 220 EMA Upside Breakout template. What is it and what is it all about? There's good information on my blog, and I'm going to go through some of that information here because I think it describes the strategy very well. And you can always go to the blog. Easy way to get to this particular article is to bring up the 220 EMA Breakout template, which you'll find in Stocks and Commodities category down here. And then if you just click on template info, this template is linked to the article, the blog article, and it will open up a web page and you can read all about it here. I haven't repeated the article. I have a link to the article if you want to actually go to the source. And so the link to the article is up here. Now you can, with Stocks and Commodities Magazine, you can buy individual articles if you want to. But they also have a good subscription, and I've subscribed to, it's like a 5-year subscription, and you get to access the entire archive of Stocks and Commodities, and it's a searchable archive too. So that contains lots of good information, and you can go and view the actual article there. But I have summarized it, and the system is called the 220 EMA breakout system because, and this is where some people, without reading the details, you might be confused and think that you're talking about a 2 EMA crossing over a 20 EMA. That is not the case. This is called 220 because it requires 2 bars to be completely above the 20 EMA before a buy is triggered. And here's an example in Arena Pharmaceuticals. The 20 EMA is your red line here. Okay, the green line is the 50 simple, but the red line is 20 EMA. There's 2 bars that are completely, and that is the high and the low. The complete range of the bar is above the 20 EMA. And the system triggers an entry if after this is a setup. There's no trade on these 2 bars. It's just a setup. But then if you get a cross above 10 cents above the high of these 2 bars, then you would actually, that would be an entry signal. So buy alert is where this box is highlighted here. This, in the template, you'll see where this comes in. The template will actually point out all stocks that have a buy alert, and it will tell you the level to watch during the day for an entry. In this case, it would have been around 21. And if you're watching this during the day, that would have triggered an entry and you could have actually got in at the level. And then you basically, let's just go on before we talk about the exit. But yeah, so you place a buy stop 10 cents above the buy alert 2-day high. And also note the original article is based on trading commodities, and it suggests buying the buy stop being 10 ticks above the buy alert. So this is not using commodities. This is actually running this on stocks, and so 10 cents I've chosen here, but that's sort of arbitrary. I think you should just be somewhat a little bit above the 2 bars, and you could make that a 1 cent if the stock was much lower priced. But the template itself deals with 10 cents for every stock. The exit is super simple, and it's basically if the price touches the 20 EMA. So you can see in Arena, you got your entry here. You had rapid move higher. Some consolidation occurred here. Could have broken out at this point, but it didn't. It took a dive down to the 20, and that was the stop level. Now the 20 EMA changes during the day, obviously, for the current bar. So you never know where the 20 EMA is when you're looking at intraday. So this template uses the fixed 20 EMA from the prior day as the exit level. Now, of course, you can change it, but because this is trying to capture big moves, those small little changes are insignificant with this template. It's basically the idea is, you're trying to just get something that you can stick with for a longer period of time. And I think that this, and it would be interesting to come up with a good way of trading this with using options. And that's why I always like to run this on my list of CBOE weeklies, because I believe there is a good option strategy for this, because with options you can hold them for multiple days at a time. You can devise a strategy where you're minimizing the time decay of your option. You've already got a limit, so you might not necessarily you might not have to put a hard stop in as a protective stop, because you'll note that in some cases, and we'll go through some of these in a sec, you get big gaps down, and it can ruin your strategy. Whereas you only think you might have at risk 2% or 3%. It could turn out that you have, because of a gap down, you could lose 20% or 30%. An option strategy would be good there, because you automatically have created a limited risk trade. Now let's get onto the template. I'm now going to look at the program itself. We'll do all of the template work in here. Okay, so here's the template, and you'll find this, as I said before, in the Stocks and Commodities category on the right-hand side. Make it a favorite if it's something you're going to look at regularly, and then it just appears in your favorites category. And as I said before, I like to run this on the CBOE weeklies list. That's a list of 500 stocks updated every month. And it's just a list of all stocks that have weekly options available for them. So all you do is just as always, hit the run button, and this is the report that you get. Several reasons I like this template. One is that it keeps track of trades that have previously been entered, and it keeps track of what the current gain is in those trades. So if I've missed a few days without looking at the template and I come back in, I can see, oh, well, 5 bars ago, there was a trade entered here, and this is tracking what the gain is in that particular trade. The template itself, if we look at a chart or call up a chart here, is linked to a chart to the actual entry, to the actual day. If you highlighting, you have edge event annotations turned on, it's just going to highlight the today's day. So that's not so useful here. But when we get into the backtesting part of this, you'll find that you can actually highlight the entry and the exit. But the template itself is linked to an indicator at the bottom of the screen. You'll see here, this indicator, when this blue line goes from false to true to a 1 value, that's the entry. So if you want to see the entries and exits, you just go back through the chart and you can find all of the entries over here, and the exit is here. So all of these are indicated in these indicators. That's quite nice. Now let's look at this is sorted. I think the list by default is sorted based on stocks that are currently in a trade. So they have that status over here, in trade, yes. And with highest percentage gain at the top of the list. So let's take a quick peek at this. Put this over on the left. And we'll just go down through the currently open trades to see what kinds of trades we're picking out here. So Roku, obviously I said in the email as well, Roku is the 57% gain. Now, if you're talking about, if you're trading the stock itself, 57% gain is quite nice. But if you are doing an options trade, then your risk reward can be such that you're actually making more of a percentage compared to the risk that you're putting on. So so as options trades, I think these can be quite nice. There's Hershey here, and that's currently 22%. This at the entry for Hershey was down. We're looking at the blue level down here. This signaled an entry. There were two bars here that were above the 20. Then the entry was signaled on this third bar, and that went from 112 to currently 138. You can see it never, in this rise up here, it never came down to touch the 20 EMA. Now, there are other templates in the system, and there was one that I put in for George Lee, which is a 210 template, and he requested that I put in this template to look at the 10 EMA, because the drawdowns, not drawdowns, but the amount that you can give up in a trade like this using the 20 EMA as your exit can be quite high. And so he liked to use the 10 EMA as an exit. I still prefer, as a template, I still prefer the 20, because you get stopped out less frequently. So in a 10 system, you would have come down, in this case here in Hershey, you would have hit the 10, you'd have been out, and you'd have had to have waited again to get in. So there'd have been a lot more trading going on. Now here you'd be stuck in a trade, and you'd be watching this come down here and wondering why you're still in the trade, but then it took off again. So this allows you to kind of stay in, but you have to have that mentality that you're in there for the big moves and not trying to generate a lot of trades. If you're doing options trading too, there's nothing stopping you from, if you're in a trade that starts to move in your favor and you're worried about protecting your gains, you can, for instance, move your puts up. If you had a trade that was maybe you had a synthetic long, so a call with a very high delta, and you also had a put at the money, you could, when you got into these levels here and you thought this is now made a significant move and you want to protect a little bit, you can move the put up to give you some protection. But there's lots of things you can do with options to try and take advantage of this. Okay, so let's just move down through the list. We've got Zillow, we've got Lockheed Martin, this is at 15%. The number of bars in the trade is also an interesting statistic. And that is, if we look at the template, go back here, we'll see there's a column for number of bars currently in the trade, which you can sort by this as well. You will find that in general, the longer the trade has been on, the higher the percentage. Because if you think about it, if the trade has been on for longer, it means it hasn't hit the 20 EMA. It has been going up all that time. So there's a very good chance that that's a much more profitable trade. But in some cases, like in the Hershey case, that's not the case. It's been in 52 bars, but it's a 22% gain, whereas Roku has just been moving, I'd say, at a steeper rate. It's been in for 27 bars, and it has a 57% gain. Now, these are all trades that have currently been on. So you don't jump into these trades midway through the trade. But the trading system isn't designed for that. It's designed to help you spot where the entries are. So let's go back over to the status over here. These are currently in trade. Now, if there is a buy alert, so we can sort by has alert. Okay, these are not in a trade, but they currently have an alert. So something you can be watching for. So let's take a look at some of these. Oops. Okay, so this is the diamonds spider. This has got an alert. So it's been 2 bars above the 20. Now, and now the long entry is 10 cents above the high of that bar. The high of the bar was 26.12. You can see the long entry stop is listed down here as, sorry, I said 260. 26.12, I meant 260.12. And so the long entry stop is 10 cents above that high, 200. Let's just be accurate about this. Let me come over to get my actual numbers from the chart. If I look at that bar, the high is 261.12. So as per the system, 10 cents above there would be 261.22. And that's what's listed in the template. See, it's much, just rely on the template. Don't rely on eyeballing the chart. The template will tell you everything you need to know. Long entry stop, 261.22. So if on Monday you get 261.22, you are going to be, this system will take this as a trade. Let's come down. What else we got? We've got the 3X financial shares. Got Flowtech Industries. The system doesn't pay any attention to overhead resistance or things like that. So you can be somewhat discretionary to your own preferences. I think that in general, the system is just giving you statistics on if you take every single trade that's available. If you can get something that's profitable, if you're taking every trade, then if you're cherry picking trades, of course, you could be worsening your performance or you could be improving your performance. But in general, if you're picking trades from a group of trades that do well over time, then if you randomly pick them, you'll probably have the same percentage or the same edge. So if you cherry pick them, potentially you have a good edge too. So you could choose not to trade things if they're approaching highs, or it's obviously you can't take every single trade in the system because there's a lot that come up. But it does give you good ideas. There's the real estate ETF. Let's look at, let's just zoom in here. Why did this get a signal? We've got the 20 EMA. You've got 2 bars above the 20 completely. This bar here didn't count because the low was just below the 20 EMA. So they started counting from this bar here on Thursday, and then the Friday's bar over here is the second bar. So the entry level would be 89.74. That would be, I think you get the idea of the alerts, what the system is. Very simple, as I said. Anything else I can show you on the template? Well, let's take trades these are alerts that may enter tomorrow, but of course a lot of these won't because we won't get that people. What about trades that did enter today? So let's sort by that. Now, obviously they're in a trade because they entered today. And now these are ones that entered on Friday. And we can see why they entered. They had 2 bars. This one, ILMN, had 2 bars above the 20 EMA. Created an entry 10 cents above that, but it gapped open above there. So that still is an entry as far as this system is concerned, but you did not get a price that was 10 cents above. You had to go a little higher. If I come over here, I've now sorted by entered today. We can see the trades that were entered on Friday, and we can see what the gain is if you had entered. This is now a 1 day, because the number of bars in trade has been 1. Your 1 day 4.5% gain. So ILMN has a 4.5% gain in one day. TTD, 2.53% gain in one day. And so on, all the way down the list. Now, there are some in here that are going to have losses. So these were entered on Friday. Budweiser, that's a loss. It entered at the open here and then lost a little bit. The biggest losing trade that was entered on Friday, SunPower. Let's see why that is. Okay, we had 2 bars above the 20. The entry was triggered 10 cents above that at about, I'm going to say 8.52. Okay, all the way up here. And there was a little bit of a move higher after the entry, but then it sold off, and now that's currently a loss. 2% hasn't fired an exit. It's got to get down to the 20 EMA to fire the exit. Okay, so it's a good summary there of this template. What I said I would also show is how can you backtest this over periods of time. And another reason that I like this template is that the script that has been written to produce the template report has also been adapted so that you can actually run it through EdgeRater backtesting and get all of the entries and exits in the backtesting program very easily. So let me show you how to do that. Let me just see if there's any questions on this. Okay, Ross, you figured that out, how to bring up the data window. Yep, good. And just if anyone didn't see what I did to bring up the data window, there's a little box here, show values panel. That will bring up the data window. And the rank value, that is a good question. There is a rank value over here. Okay, that's a very good question, and I will have to get back to you on that. It's been a while since I put this template together. I think the idea, I'm not sure the actual formula behind the ranking value, but the idea for having a rank value column was that there are so many that can come up on one day, and if you were actually going to be looking at them to kind of cherry pick some to make a trade, what would be better candidates? And so there's a formula behind the rank value to give you that number, but I cannot remember right now what it is. I have to get back to you on that. And we may discover that as we go forward with the backtesting. So let's move on to the backtesting side of things. So in EdgeRater is originally designed as a backtesting application. So it has some quite unique tools for allowing you to backtest certain strategies. So I'll get to you in a second, Paul. So one thing you can do is, we primarily, when we're dealing with templates, we're in the Edge Excel templates tab over here. And most of the time, this is where you stay. I think for the majority of people, you stay in your templates tab. You don't really move to the other tabs here, and that's fine. But once you start to get into backtesting, you then make use of your entries and exits tab. Let's clear those signals. That's something I ran earlier. You get to your entries and exits tab and your trade simulation tab. Now, entries and exits is, well, it's what it says. It's generating those actual entry signals. It's giving you the stocks for the for each day that are generating entry signals, and you can run this over any time frame you choose and any symbol list you choose. To change your time frame, you can use your date filter up here. And I've got this set to 12/24/2018. That we know that was the base low, and I'm running it through 12/31/2019. That's a future date. That just means it's going to pick up everything that occurred through to today. And then we have to go over to our chart scripts tab over here and do a search for anything with the word sim in front of it is one of these special templates that I talked about that has been coded to give you both entry and exit signals without you having to run two separate scripts for entries and exits. So it does the whole trade simulation in one go. And there is something in here called sim_220 EMA Upside Breakout. If you double click on that, it popped it over into this security selector over here. And then you just hit the run. And that's going to go through that time period that I said, so 12/24/2018, all the way through to Friday, 6/7/2019. And then for every day, it's picking out if there was an entry. So 12/24/2018, there was an entry in, hey, look, all of the gold stocks had entry on the 12/24/2018. GDX, that's your gold miners, JNUG, Nugget, and AG. Just like a regular template, this is also linked to a chart, so you can double click on here and we can take a look at, just out of interest, I always like to bring up a chart and see what we're talking about. Okay, so this is linked. If you have annotations turned on over here, it's actually going to point you to the day that you're looking at over here. So here's the entries for 12/24 from my list. 2 bars above, then you've got a signal here. This was a bar that triggered an entry. It's not pointing to the actual price of the entry, just the bar that triggered the entry. The price will be down here somewhere. Okay, so it's just by running the entries and exits tab with this script, it's popping out in all of the stocks in the various columns to show you, to generate a list essentially of stocks that are going to be used in the trade simulation, because the trade simulation is going to knit together these entries and the exits. We haven't talked about the exits. Let's go find where the exits are. So this script, I said, generates both entries and exits. So if I click over to the exits tab, it will also put all of the exits in here too. And currently, these are not linked together. It's a completely independent, separate list of things that are generating exits. You may find in here that there are exits without an entry having occurred. Now, that's not a problem because we're not, at this stage, linking them together. That's what we do in trade simulation. So trade simulation will, if there are exits that have occurred in a stock and it never triggered an entry, trade simulation will just ignore it. It's only going to pick up the entries and then go forward day by day until it finds an exit for that particular stock. Anyway, the entries and exits are a key part of doing your back testing. So once you've got your entries and exits, and there are many different ways to get these, but and this is how you do back testing. But then you pop over to Trade Simulation tab. Now, I have previously run this, so what you would do, this wouldn't normally be populated when you first come here. You would then have to, the settings I should tell you about that you would need to set. The first one is over in the simulation settings side, there is a box called at the top, Use Scripted Entry and Exit Rules. This is a special setting designed for use with the scripts that have this sim in front of them. As I said before, the sim scripts have been specially written to do a lot of the things that you would have manually done before. It will do them in the script. And then in the trade simulation, you can say, well, use those scripted entry and exit rules, because there's more things in that formula to do with the entries and exits. So I'm not going to have to put in my entry rules here about entering on the entering long or entering on the event bar on close. The script itself contains that information. So you say use scripted entry exit rules. You can put in your portfolio rules. So you can say, whether you're going to allow duplicates, how many the maximum number of open positions you're going to allow for the portfolio, what your initial starting equity is, how many dollars per trade you want to apply to this strategy, etc. And then when you've got that set, all you do is you hit the run on trade simulation. It's going to tell you how many trades there are, the average number of days in a trade, and the P&L. And it's when you've got this that you can now see the chart with the entry and exit highlighted, but you can also do things in here like sort by P&L. So whereas the template, when you sort by P&L, it's only going to show you currently open trades P&L. The backtesting here is going to show you the P&L over the entire time period that you're running your test. So the maximum P&L we have since December 24th, 2018, in any of the stocks that are in the CBOE weeklies list is 61%, and that was in Cron. So let's bring that up. And remember I said now that this is linked to the trade, because it's linked to a trade, an actual trade item, an entry and exit, we can actually see the entry and exit highlighted or annotated on the chart over here. And you can also, that corresponds with the blue 0.1 value down here. Okay, so we can come down through this list and see all of these great trades. What about the trades? Whereas the template will only show you lossy trades that are currently open, this will show you all of the trades that lost over that time period and what the maximum loss was. And this is where I said you have to be careful, because you can end up with situations where gaps occur. And this is quite a significant case of that. You were able to get into this trade in stamps.com over here on this bar, and it was looking like a great trade all the way up here. You think your loss is limited down at the 189 or 190 level, but the gap kills you, and you go down to a 46% loss. So this is where options would be a much better way to deal with that. You can have a call option, or you can have some kind of a spread, and you know you have a limited, your max limit of loss. So again, this Kraft had a similar situation. It was only in a trade for a day, and then you had this massive gap down. Tilray, I believe this is the cannabis. Everyone's been talking about this stock. Was on a tear over here, parabolic move, and now entering consolidation. Now one of these little blips up here was another. Everyone was getting excited again here. Template actually picked this out. The system was picking out this stock because it conformed to the rules, but unfortunately that proved to be a false move, and the exit was triggered down here at the 20 EMA, 20% loss. Okay, so you can end up with some quite large losing positions, more than you would expect from where the 20 EMA is. But on the flip side, you can end up with some very nice winning positions too. Now, the part of doing the back testing, we now have statistics because we've listed every single trade that occurred in the system. And if you've never seen one of these trade list reports, let me just show you, go through some of the information in here. It will always give you the price of your entry, the date of the entry, the symbol, obviously, and then the same for exit, date, exit price, number of shares. This is all based on your portfolio rules. If you've chosen to do initial equity of 10,000, but that's not the important thing. It's the dollars per trade. So initial equity is set to $100,000, dollars per trade, 10,000. So the number of shares is just purely $10,000 divided by your entry, or divided by your entry price. That gives you the number of shares that were traded for the simulation. But the PL percent is not based on number of shares. The actual PL value, this 6126.93, is based on number of shares. But the PL percent, that's just essentially your exit price minus your entry price, divided by entry price. Maximum MFE percent and MAE percent. These are interesting numbers because this will tell you where the stock got to before you took the exit. What was your maximum favorable excursion? So in the case of Kronos, we go back to the chart over here. We know that we exited here in this trade at a 61.27% gain, but we also know at some point in the trade we were at 104.23%. So we had quite a significant drop. And that was one thing I was saying about using your 20 EMA as your exit. You have potential for large drops from your maximum favorable excursions. However, having the 20 EMA as an exit allows you to stay in trades without doing lots of frequent in and out trades, which can get frustrating. Okay. Where did I put my, hang on one second. Here we are. Okay, and then the adverse excursion is how far it went against. So this would have been the kind of pain threshold level. Okay, how far did it go against before it turned around to make a profit? In this case, 17% against, but it ended up making a 1.4% profit. Here it went 21% against, but ended up losing 20.5%, and so on. But there are statistics in here too. So if you go down the left, you'll see total number of winners. Well, first of all, total number of trades, and then you have number of winners versus number of losers. And here we'll see that there are 37% winners and 63% losers. So any trend trading system will have more losing trades than winning trades because you're trying to capture large moves. But your winners should be a lot higher than your losers. So in this case, you've got an average profit of your winning trade of $660, but your average loss is $300. And so that works out to be a system that is profitable. But you may be able to make it more profitable by using some kind of options strategy. And I should make it clear, I'm not recommending using this. I'm not recommending that this is a great system that's going to work for you in all time frames. All I'm saying is this is a system that's been published in the Stocks and Commodities Magazine, and it's implemented as a template in the program. So if you are following this system, you have easy ways to find the signals, and you have a report of what you can expect in terms of your statistics. Now, how you implement those trades would be something that you would design yourself. For instance, if you're going to be using an options strategy, which I think I would recommend that for this type of system, you would be able to design your own options strategy around there. Now, what else have we got here? So the average number of average number of days in a trade is listed here. What else is interesting here? I think, let's see what we've got. Looking at some questions now. All right, so let's go back to some of the questions. If your Paul, if your chart template isn't linked to the chart, how do I change it? Yeah, so in a lot of reports that you produce in EdgeRater are linked to special charts, and so but you can turn that linking off because there are cases where you have your own layout of a chart that you want, but you don't want the template to overwrite your layout. And so there's this button over here that I'm highlighting that you can see, link to template layout. If that has a yellow highlighting behind it, it's linked to the template. If it doesn't, like that, it's not linked to the template. Okay, let's see. So yeah, so this shows that you started with, in this case, 100K. Your net profit was 76K. You didn't end up with 76K. That would have been a loss. So that was your net profit in this particular case. All right. You do have to bear in mind also that you're not going to be able to take every single trade because there are lots of them that come in. So, you have to put a lot of things when you're looking at back testing. You have to kind of consider a lot of things. You will never be able to reproduce exactly, even if you went back to, when the trades occurred and you started to implement the system, you'll never be able to exactly reproduce what the back testing shows. So I think you just try and get a general sense for statistics of a system, and then the way that you apply your trading rules around that is also going to have a big effect. I think, yeah. Okay, I think I said that before. Can you put earning date on the charts? Unfortunately not. I don't have earnings in the system. That's kind of classed a little bit as I would put that under the category of, it's not really, but it's kind of fundamental data. And there's none of that in EdgeRater. EdgeRater is purely looking at open, high, low, close, volume. That's the data that's available in the program. There's no external data to do with earnings dates or PE ratios or number of shares outstanding, all that sort of thing. Okay, Ross, going back to Tilray trade. Yeah, sure. Let's go back to our trade list. Here's Tilray. All right, and your question is, explain how the entry rules would have worked, for sure. Okay. So we have our 20 EMA here in red. Now, this bar, it did poke above the 20, but it's not completely above 20, so that doesn't count. The next bar on 1.9 was mostly above the 20, but its low was below the 20, so that didn't count as your start of your trying to create your buy alert. The next bar, however, is on 110, and you can't quite see it, so close, but the low of this bar, obviously, and I know this just because it created an entry 2 bars later, the low of this bar was not below the 20. So this is the first bar to start counting for your buy alert. Second bar is this bar here, and that sets a entry level 10 cents above the high of that bar. All right, which already now we've got quite a large move higher, quite a distance to get back to the 20. And the entry is 10 cents above that. It's pointed out here. And that's simply it. You're just in at this level and hoping that this is a start of a move, but it turned out not to be. And you stopped out here down at the 20 EMA. Percentage of winners. Yeah, so let's go back to the trade summary. Oh, I think I covered that. Yeah, trade count, 37% winners. No commissions included. That is correct. In your portfolio rules, you could put commission per side if you want in here. But generally, when I do back testing, I don't put commissions in because I'm not really trying to, I don't know what commissions are going to be necessarily. I'm trying to just see whether the actual price moves are going to have some edge or not. And after that, you can work with your strategy and figuring out if you're going to do option strategies and what your commissions are going to be. Jeffrey, is the template better performing when the SPY is on an upward trend and it's And is it a worse system when SPY is in a downtrend? That's a very good question. And I don't know the answer to that, but that's something to investigate. This is something that the whole system has been designed so that you can investigate things like this, and it's something I would definitely experiment with. So if you wanted to find out the answer to that question, you would just I'd come over to your chart designer, and I would just look at my dates here, and I might just do manual testing and say, well, here, look, SPY's been in an uptrend from this level 1224 to 5.1. Let me test that as a period. Let me test this downtrend here. So you can run various segments to run that test. So that's one way of doing that manually. The second way is all of the scripts in the system are editable by you. So as part of your entry criteria, you could have changed that to be, I'm only going to enter with an upward sloping moving average. So several ways to do that. But if you're not comfortable with changing scripts and writing those formulas, then just doing it manually like this would be a good way to do. Then what you would do is, once you've got those dates in your entries and exits tab, you come over to the date filter and you drop down this box here. You put in your from and your to date, and you must make sure when you've done this that you have highlighted the use button. If you don't see a orange shading behind the use button, you're not going to use that date, and it will just run over your entire database, your entire snapshot. And this snapshot for my CBOE weeklies has 10 years of data. So if I don't hit that use button for a date, I'm now going to run this over 10 years of data. Also interesting to do. Absolutely no problem doing that. But if you're trying to use specific market environments, then set your date filter up and click the use button here. You can also do price filtering and volume filtering, but I wouldn't recommend doing it here. You can do, but the problem with price filtering is when you're looking at historical data, if you actually don't know what the real price was back in history, if there have been splits that have occurred, historical data is adjusted for splits and also for dividends. So if you thought you were never going to trade anything below $10, you don't know in the historical chart whether the price was actually $10 because if there have been several splits or reverse splits, the price gets adjusted in the further back you go. You don't actually know what the real price was. Anyway, that's one reason why I wouldn't use price filtering. Similar for volume filtering, it's not quite as bad, but again, I wouldn't do it if I'm just trying to test the viability of a system like this. Okay. Daily equity button. That's a good question. So come back over to trade simulation. Then we've got this daily equity chart over here. So this is then taken from the start date of your trade, whenever you chose as your starting period, and takes your initial value for your portfolio, which is 10,000 starting. And then it should, just as equity grows, and it's calculated on the value of stocks that are held in that portfolio that are held open, or the profit and loss after they've been closed. So you can see that this moved up all the way through to about March of 2019, and has since had some downturn in the equity. You can also see at the bottom is the number of open positions, and I ran this on the CBOE Weeklies list, which is a list of 500 stocks. So at some point in this system, there were 300 open positions. So always pay attention to the number of open positions. Okay, well, even back here, you have on 2/6/2019, 348 open positions. That's almost all of the, well, not almost all, but it's 70-80% of the list is in an open trade at this point. Obviously, it's impractical to trade, and you may as well just take the SPY at that point. If you want to compare this equity to SPY, you put the comparison symbol in over here and you say get data, and then it actually will plot behind a line of SPY. So you can see if the strategy actually moved up with the markets. And actually, this is a reasonable way. It's not as specific as running the strategy over various time periods, but you can then visually see if there were uptrends at the same point as the market, what happened when the market was in a downtrend. So the market was in an uptrend from 1224 to, as I think I said, was 5.3, and this trading system did well for the first part of that move, and then did not recover to a high when the SPY did. And then since then, system has been doing worse, but also note that there have been fewer and fewer trades taken, just because you're going to find fewer and fewer stocks that are above their 20-period moving average. Ross, the low of the day has to be above the 20 EMA. That is correct. Jeffrey, does it work well on ETFs? Definitely something you could try. And so instead of using the list of CBOE weeklies, go ahead and change in your entries and exits tab to use whatever list you want to use. You can use a list of ETFs, specific sector ETFs, like gold or oil, or if you have a complete list of liquid ETFs or any ETFs that you can get from anywhere, put them in the system and test it on your own list of things. Pete, have you yet to find a system works both in bull and bear trend? Yep, definitely hard to find something that works in all market conditions. Jeffrey, is there a way to only make purchases on one specific day of the week and then see performance and daily equity based on buying only on that day of the week? Let's say you only bought on the Mondays. Okay. Well, yes, there's a way. I'm just trying to think of if there's another way. Then the first idea that comes to mind is that you this script, the 220 EMA Upside Breakout, is the thing that's driving this system. So take a look at Tim 220 EMA Upside Breakout. I'm going to edit the script. And I'm just clicking the edit button here. Not that I want to edit it. I just want to see what it what it looks like. And I was trying to zoom in there. I can't really do that. So what you would do, I think, as your first way of doing this is to add a condition for your buy in here that it's only going to be on a certain day of the week. I'm not going to try and do that right now, but it is possible to do that within this script. You can see what this script looks like. It's quite a bit more complicated than, say, a regular indicator script, because it's doing a few more things like adding the actual entry prices and exit prices into the script so that the trade simulation tab can use it. And that's when I said before, this is a special script that is able to use the scripted entry and exit rules over here. That's what it's using. It's those special notifications in the script to indicate long entry prices and long exit prices, or short entry and exit prices. Ross, I can see quite a bit of value on this in the scan and backtesting. Thank you for your work. Oh, you're very welcome. Glad you like it. Jeffrey, yeah, I think I answered that. What does the rank selector window do on the entries tab? That's a good question too. Originally, with EdgeRater, when I originally wrote this, I had the thought that you can put in rules for a security selector, and this is going to give you just a whole list of stocks that meet those filtering criteria or threshold level criteria, whatever rules you put in. But that also you might want to add a ranking calculation to it too, so that they don't just get listed randomly in this list, but they get sorted based on some kind of rank. And last weekend we talked about ranking with Alpha 21 ranking and all other kinds of ways of ranking. So the rank selector is designed to then rank those stocks. The ranking selectors are only over here in the managed code, and so one of the things you can say is, just give me the top 2 based on percent gain loss close to close. And then I can run this again. This time I'm only going to get 2. So now I've limited my, I haven't limited the exits. That doesn't really matter. It's the entries you're trying to limit. And so now if you run the trade simulation, you've now filtered based on this ranking. So you can see if that makes a difference to your strategy. So that's the idea behind it. So now if I run this, I've now only got 192 trades, and you can see that it's changed things somewhat over here. You can take a look at the summary and see now I've got 40% winners, 60% losers, which I think is better than previously. So you can do things like that to play around with the rules. And the other thing, once you've chosen a rank selector, yep, that's all you need to do. Just because it's limited over here. Anything that appears in the entries signals area are the things that are going to be chosen for the trades. So if this has been limited already, you're not going to get anything else in your trade list. Pete, can you compare this to TQQQ? TQQQ. So I think you're talking about the daily equity, and right now I've got SPY as in my list over here. So let's see. I believe. Let me just see what happens if we do TQQQ. Okay. So it's a gray line behind there is TQQQ. She seems to follow this way closer in terms of the ups and the downs. What about an inverse version of this template? Good question, Jeffrey. And you are taken care of there, because we already have, if we look in the Stocks and Commodities Magazine category, the 220 EMA downside breakout right here. Oh, we also have the 220 EMA Upside Breakout weekly, and that may also get you somewhere. If the weekly one is going to run using weekly bars instead of daily bars. That's the only difference there. And you have the weekly Upside Breakout and the weekly Downside Breakout. Okay. Okay, guys. Thank you all. I think we're just about have covered all of the questions so far. So I would like to thank everyone for coming, and should be an interesting week next week. Look out for gold. See what happens. Is it going to hit that overhead resistance and come back, or break through? Also, check out this template on a daily basis and see how it works. Play around with some back testing. As always, if you have any questions, let me know. Try and cover answers to questions I receive in the week. I'll try and either email you back or cover them on a following webinar. But it definitely gives me clues as to what people might need to know with the program. So I really appreciate your feedback and appreciate you all coming today. Thanks, everybody. Have a good rest of your weekend. Okay, bye for now.